Ford Motor Company reported quarterly financial results that revealed great insights for investors. Management also talked about the impacts of tariffs and how much it's going to cost the company. I'll review the latest quarterly results, discuss the impacts of tariffs, and update my recommendation for Ford stock. Coming into the quarter, coming into the year, I've had the company stock rated as a hold, and I'll let you know if I still think it's a hold or if I think it's a buy or sell following these quarterly earnings results.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
For the quarter, which ended on March 31st, 2025, Ford reported total revenue declined to $40.66 billion. That was down from $42.77 billion in the same quarter the prior year. The company said that operating income fell more dramatically from $1.225 billion down to $319 million. Now, when you divide the $319 million by the $40.6 billion, you'll notice that the company did not generate very much profit margin in the latest quarter. And car companies are notorious for poor profit margins. That's why you've heard me talk a lot about how much I dislike the car industry from an investor perspective. I've said that if you want to make money from a car company, there are better ways, like working at the car company or seeing if you can own a dealership and partner with the car company in that fashion. But investing in a car company through its stock has generally not been a lucrative investment strategy. Car manufacturers face significant pressure from all sides, from labor unions, from customers, from competitors, from regulators, etc. The competition is intense. There's oversupply in the industry, and now they're facing regulations. Thankfully, those regulations are easing, pressuring them to produce cars that customers barely want to buy in the electric vehicle mandates, pressuring companies like Ford Motor Company to produce cars that customers are not excited about. Let's face it. Even after trillions of dollars of incentives, people are in the United States, less than 10 out of 100 people are choosing electric vehicles. And so Ford Motor Company is under pressure, and the tariffs on top of all of that existing pressure, it's really a tough time to be a Ford stock investor. All right, so the company updated investors on their full year 2025 prospects. They said the underlying business is strong. It's tracking with their previous fiscal year adjusted operating income guidance of $7 billion to $8.5 billion if you exclude the impacts of tariffs. So if we just excluded the impacts of tariffs, Ford is saying that the business is on track to deliver what they expected for 2025. Unfortunately, we are in a higher tariff environment. And so Ford is saying that the estimated gross cost of tariffs on their business will be $2.5 billion this year. So that's roughly 1/3 of their expected profitability this year will be reduced as a result of tariffs. However, the company also said that they have some strategies they can implement to mitigate the impacts of tariffs. And so the adjusted impact is going to be about $1.5 billion negative. So they're going to lose about $1.5 billion net if these tariffs remain in place. So for that reason, and given all of the uncertainty, they're just suspending the 2025 forecast. They're saying, look, there's too much movement, too many changes for us to even give you any kind of idea of where we think our business is headed this year. So given the material tariff-related near-term risks and the potential range of outcomes, they're just suspending the guidance. So here's 5 scenarios that they highlight. There could be industry-wide supply chain disruption impacting production. There could be future increases in tariffs in the U.S., right? The President Donald Trump in the United States has been notoriously unpredictable, right? Increasing tariffs, decreasing tariffs, pausing tariffs, adding exclusions, removing exclusions, etc., etc. And so if you're an enterprise like Ford trying to make decisions, how can you make decisions? How can you give your investors guidance when there's so much uncertainty in your operating environment? There's also changes in the implementation of tariffs or including tariff offsets, right? Reductions, credits, exclusions, etc. There could also be, and there has been, retaliatory tariffs and other restrictions by other governments and the potential related market impacts. So the United States placed tariffs on all of its trading partners, and they're not going to stand back and just absorb those tariffs. They're going to react. And those reactions are not likely to be positive for Ford, right? Because they're a major US car company. They're going to face these retaliations from other governments, and Ford makes a significant percentage of its sales in markets outside of the United States. And then finally, there's policy uncertainties associated with tax and emissions. So the electric vehicle mandate, those are getting paused and reduced. At least that's one good offset from the current administration in the United States. The previous administration under Joe Biden was very aggressively pushing car companies away from internal combustion engine and towards electric vehicles. And that wasn't good for Ford because customers don't want to buy those, and Ford was forced to produce those. Not good for profits. The current administration is at least a little less pushy towards companies going for electric vehicles. They haven't squashed all of the mandates, but they are trying to pull them back, pause them, reduce them, give car companies more time, give the ecosystem of the electric vehicle industry more time to develop before they force car companies to produce these cars that less than 1 out of 10 consumers are choosing. So there's so much uncertainty, not a good time to be a Ford stock investor. So my intrinsic value calculation for Ford, I'm not going to go through step by step. I'll just share with you the outcome of my calculation. I updated this calculation today, and the intrinsic value I calculated for Ford Motor Company is $11 a share. Compared to the current market price of $10.48, it looks fairly valued. It looks like it's a fairly valued business at the current market price. If you want more detailed breakdowns of these, join my channel as a member, less than $5 a month. I think it's a great deal. You get dozens and dozens of videos highlighting detailed breakdowns, discounted cash flow valuations. And so to update my recommendation on Ford Motor Company, I did not have the stock rated as a buy, and following these quarterly earnings results, its prospects look worse, but I'm still maintaining because the business looks fairly valued. I'm maintaining the hold rating on Ford Motor Company. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.